Just a heads up to my regular viewers, I'm actually having a bit of trouble covering everything that I believe is useful to the Tesla community. I am passionate about Optimus and Megapack and Cybertruck. We have one of those on order. And I'm passionate about Generation 3 vehicles. And now we have to add India and Mexico and Reno and on and on and on. On top of that, there's the LK99 issue, which is not dead yet. Believe me, it is not dead yet. So even at 3 videos a day, you might have noticed that they're getting longer, and today's will not be an exception. Hopefully, that's okay with you. I have no idea how to get it all in. Please remember that I also try to list upcoming episodes and roughly when they will appear in the description below, so you can check that out and see which ones you want to be sure to take advantage of. Do not fail to see the video with Larry and Nahal Trivedi regarding India and South Asia earlier this morning. It has been described as brilliant by one commenter. So that will be, I'll put a card right here. Usually I don't put them till the end, but I'll put a card right now. All right, let's go. This is Randy Kirk. If you like the channel, if you like anything that we do here, please hit like. It helps the algorithm. It helps this channel to get better. All of you cannot afford to do the Patreon thing or feel like you can't afford to, but even hitting like, listening to half the video or more than half the video, hitting subscribe, hitting notify, all of those things, they just take a second and they really help the channel. So anyway, and by the way, Patreon, remember, free books, audiobooks, pick your choice of any one of the four. All right, we will be taking the South Asia subject that we started this morning, talking about India. We're going to take this further over the next few days. Asia is a very, very big deal in your future. I don't care if you're even as old as me. Asia is going to impact you for years to come, and not necessarily China. India, Malaysia, Indonesia, Japan, of course, South Korea. Just go down the line. We know North Korea impacts us, even if just the threat, the nuclear threat overhanging. And then we're going to count Australia in South Asia. But anyway, all of those countries over there are, most of them are growing. Most of them are doing much better than they have in the past. They're all going to be a big deal. Well, they're going to be a big deal for Tesla for sure, as obviously Tesla is looking at Indonesia, Malaysia, and India as possible places to expand. And China has all of a sudden become on everybody's B list in terms of where to set up manufacturing. So I'm going to have experts, in addition to the experts I had this morning on India, I have experts lined up to deal with China later this week. I have experts to deal with, well, the same expert, actually, it's Brian Wang, who was born in Hong Kong, has relatives in China, has lived in Taiwan, has relatives in Taiwan, etc. Relatives in all three. He knows the entire Asia situation, or the northern part of Asia situation very, very well. And then we will have more later in the week. We'll just continue this. It'll be at least a 4-part series, counting this morning. Well, while you and I might still be licking our wounds with this 20% drop in Tesla, since it almost got to 300, well, at least we didn't see, and we didn't sell, rather. At least you and I didn't sell, and probably we bought more. Well, not so lucky these other folks. In an announcement earlier today, the Board of Trustees of Tidal ETF Trust noted that the Noble Absolute Return ETF, NOPE, N-O-P-E, would be closing its operations. In a press release, Tidal noted that the liquidation and closing the fund would be in the best interest of its shareholders. Elon Musk, for his part, observed on X, his social media platform that was formerly known as Twitter, that Tesla shorts, which NOPE was famously a Tesla short ETF, he said, Tesla shorts seem to be gluttons for punishment. His comments seem quite justified considering the Tesla shorts have incurred heavy losses over the years. He said, Tesla shorts sure are gluttons for punishment. I mean, how many times do they want to do this? So a little time for, ironic laughter. Okay, let's talk about China here. On the good news in the China front, according to CPCA data, Tesla produced 80,345 vehicles at Giga Shanghai in July. Doesn't seem like they're slowing down there. That is the run rate of almost exactly 1 million. I suspect that we'll see lower numbers soon because of the upgrades that we've been told to expect, but that's a solid number with potential to get higher as the upgrades take effect. So this article really caught my attention, and it should catch yours too. It kind of goes along with some of the stuff I've been talking about this week. This is the problems it's addressing are not long-term problems that are going to affect us next decade. These will be impacting the macro and even Tesla specifically in this next 12 months. So please listen to this from Fortune magazine first. There's two articles. First from Fortune. John Pollock, ZipRecruiter's chief economist, noted that if you're analyzing the latest inflation data instead of comparing it with last year, when inflation hit a 4-decade high, it looks far less intimidating. In July, inflation was 2.52 on a 6-month annualized basis and just 1.89 on a 3-month annualized basis. That's right around the Fed's 2% target rate. Backing that up was Rick Ryder, BlackRock's CIO of Global Fixed Income and head of the BlackRock Global Allocation Investment Team. He said, today's CPI data depicted continued softening in the elevated inflation levels we've witnessed over the past couple of years, he said, adding that it's not just encouraging that today's report was softer, but also that the 3- and 6-month trends on these inflation indicators are decisively lower. True-flation today, back down to 2.26, with every single category down except transport, and even that was just up a bit. All right, now listen to this one. This is the negative. We want to listen to this one carefully. It's long, but please hang in there with me. Wall Street Journal. Bizarre was the word Biden administration officials used to describe the timing of Fitch's downgrade of America's credit rating. Yet we might look back at 2023 as a pivotal year and the agency's move as a wake-up call. The Federal Reserve's fight against inflation has amplified the risk of an unthinkable fiscal crisis made possible by decades of Washington dysfunction. As a result, the investments that stand the best chance of providing shelter from that storm also happen to be unusually attractive right now. Investors have historically paid a steep penalty to hunker down in super safe short-term government securities. For example, $100 invested in 3-month Treasury bills in 1928 would have only grown to $2,000 today, while it would have become $46,000 invested in medium-grade corporate bonds and a whopping $624,000 if invested in stocks. That's according to data from New York University professor Aswath Damodaran. Especially in the years following the financial crisis, anything short-term and safe paid next to nothing. Ray Dalio, we all know who Ray Dalio is, founder of the world's largest hedge fund, Bridgewater Associates. He didn't coin it, but he came perhaps the most associated with the phrase cash is trash during that period, right after these crises. He changed his tune in a CNBC interview earlier this year. Quote, cash used to be trashy. Cash is pretty attractive now. It's attractive in relation to bonds. It's actually attractive in relation to stocks. T-bills not only pay more than they have since before the financial crisis, but also more than longer-term notes or bonds. The latter also would suffer much larger paper losses if interest rates keep heading higher. And as Dalio suggested, frothy stock valuations make a guaranteed 5% plus return on bills tempting. All right, this is what we've been talking about. I'm talking about what's happening with these interest rates. What effect is it going to have long term? When will the interest rates come down? And how and can the U.S. debt handle this? We saw last week where the debt was where they had a hard time selling all those 30-year treasuries that were offered at auction last week. Goes on to say there's a more disturbing reason cash might be king. Although there were called certificates of confiscation in these short-term treasuries were called certificates of confiscation in the inflationary 70s. Longer-term treasuries have been the go-to assets in times of crisis. The 10-year notes yield is literally the risk-free rate to value all other securities. Now, and we look at what? We look every single day at those 10 years as our key to what's going on. Now, though, the government's pile of debt has swelled following the war on terror, the global financial crisis, and the COVID-19 pandemic, not to mention the war in the Ukraine. Low interest rates and Fed bond buying masked the strain. Interest costs recently were no higher in the early 1990s as a share of federal spending. But the Treasury barely sees the opportunity to lock in bottom rates by issuing long-term notes and bonds. Thank you very much, Larry Goldberg, the other day saying they should have bought 30 tons. They should have issued tons and tons of 30-year bonds when the interest rates were 1%, 1.5%, 2%. That would have been the smart thing to do. But now it's too late. Congressional Budget Office regularly updates its long-term budget forecast and says that U.S. debt held by the public will surpass gross domestic product this fiscal year. It's only supposed to happen in times of war. I don't count the Ukraine war as the kind of war that should take us beyond the gross national product. The interest on that debt will equal about 3/4 of discretionary non-defense spending. By 2031, it will be equal to all of discretionary non-defense spending. Medicare, Social Security, and of course, interest are legally non-negotiable. Military spending isn't really optional either. No wonder the federal government is described as an insurance company with an army. Yet the CBO's forecast actually looks too optimistic. Did you hear that? Let that sink in. The CBO report that I just gave you is too optimistic. It envisions the net interest rate paid on the debt barely topping 3% in the coming years, though short-term bills and notes yield more than 5% today. The swelling pile of debt means minor changes in assumptions now have major consequences. Consider that about 3/4 of the Treasury must be rolled over within 5 years. 3/4 of these treasuries have to be rolled over within the next 5 years. Say you just added 1 percentage point to the average interest rate in the CBO's forecast and kept every other number unchanged. That would result in an additional 3.5 trillion in federal debt by 2033. The government's annual interest bill alone would then be about 2 trillion. For perspective, individual income taxes are set to bring in only 2.5 trillion this year, as opposed to the 2 trillion that it may be costing us just in interest. Not this year, but eventually. Compound interest has a way of quickly making a bad situation worse. We know that compound interest is a great way to get wealth, but it's not a good thing when you're talking about your government or even your business paying out interest. The sort of vicious spiral that has caused investors to flee countries such as Argentina and Russia. Having the world's reserve currency and a printing press that allows it to never actually default makes America's situation far better, though not consequence-free. Just letting rates rise high enough to attract more and more of the world's savings might work for a while. And that's what we're doing now, but not without crushing the stock and housing markets, not to mention the currency. Or the Fed could step in and buy enough bonds to lower rates, rekindling inflation and depressing real rates of return on bonds. Well, anyway, that's that story. Interest rate bubble. The Fed can do something about it. The Fed should begin to lower interest rates. Now, it doesn't solve the problem. The federal government needs to slow spending. They need to find a way. They need to get the cojones to be able to start slowing spending. All right, Cybertruck. I continue to claim that the Cybertruck will be the most photographed object ever, passing even the Eiffel Tower, the first steps on the moon, not to mention Marilyn Monroe and Princess Di. And that happens even before the handover event or the first customer gets their vehicle. Tesla and Elon Musk are doing an amazing job of front-running the Cybertruck handover with a constant barrage of pictures of the truck, updates on specifics about the truck, Tesla semi-trucks carrying the truck. The regular press is biting on all of this. They see a good story. With all the camouflage trucks that are driving around at this point, I'm also beginning to believe that wraps are going to be extremely popular, and very likely Tesla is going to be making it easy to do this. That might be either through their own service prior to the delivery of the truck, or maybe through some third party. We have to be getting close to the announcement if we're hoping for the end of third quarter, which is just 6 weeks away. So they're building it up. They will make the announcement of when the handover is going to take place, what that party is going to look like, who's going to be invited. All of that is coming soon. That will be very helpful to the stock. All right, what are we going to be looking at later this week? As I mentioned, digging deeper into China, Hong Kong, and Taiwan with Brian Wang. We're going to also be looking whether or not China will ever try to take back Taiwan. That's going to be one of our other subjects. When I talk to Brian and others, we'll talk about the Taiwan issue. We'll also talk about whether Tesla really has to worry about having this large plant and massive amount of their customer base in China. Is that a short-term, medium-term, long-term worry? We'll take a look at that. Then we'll have Jeff Lutz come on later in the week to look at these issues. He's done tons of business in China, specifically in the auto business. We'll get his take. And then we'll come back and we'll kind of wrap up the entire four-part series with another conversation with Larry Goldberg, who does tons of business or has done tons of business in India, as well as around the world. And remember, I also have been dealing in China for over 40 years. So that is what you can look forward to coming up this week. So if you would like to hit the like button, that would be likable. If you'd like to hit the subscribe button, that would be even more wonderful. Hit the notify button so you get absolute knowledge of every show that's coming up. 3 of them a day right now. I was not going to do 3 on the weekends, but it's turning out to be 3 on the weekends too. Yes, I'm almost out of breath now, but you know what? You need to join Patreon. I really do need more. I don't want to go to begging here, but I want to get to 125 by the end of the month. We're at 111. You get a free book. You get 2 free books if you go to the $10 level. You get your choice of any one of those 4 books. By the way, the books are selling really well right now. Thank you very much for that. All of that helps to support my reasons for doing this channel. And I do appreciate all of you. I appreciate all the folks who have done the 111 that are part of Patreon now. I appreciate the people that are coming every day or at least once or twice a day and listening to these shows and hitting the like button. All right, listen, that's all I got for this afternoon. It has been great talking to you.